Okay, good morning, everyone. How's everybody doing this morning? My name is Ben Wallace. I'm a managing director at Goldman and help lead our efforts on the healthcare mergers and acquisitions front. What I thought I'd do today is just give you a little bit of a backdrop on what we're seeing in the broader M&A market in terms of activity, put that into some historical context as you think about today's volumes, activities, deal values, where we're seeing pockets of activities within certain sectors, both from a broader M&A perspective, but also diving a little bit deeper within healthcare services, which I think is more relevant for this audience. And then talk about what are some of the trends that we're seeing that are driving M&A activity, both on the strategic front in terms of corporate M&A activity, but also particularly within healthcare services, what is a big part of M&A volumes, which is private equity participation, and where we see our private equity clients thinking about deploying more capital within healthcare services and how that might impact healthcare MSOs. Any questions along the way, feel free to interrupt me. Would love to have this be interactive, but I can easily fill the 20 minutes myself if I need to. If you think about global M&A in a historical context, just to think about the activity we see today and what this did, we looked at data going back to 1995. It's a roller coaster if you look at it. And I'm sure many of you, like I have been through multiple of these cycles where you see M&A volumes being extremely active and frothy almost, which is how I would characterize the current environment, to almost coming to a complete standstill. If you look at 1995, less than $1 trillion of M&A activity globally, whereas the last couple of years we've been hovering around that $4 trillion mark, which is pretty astonishing. But the roller coaster slopes upward, right? So if you look at the overall growth of M&A activity over the past quarter century, it's growing at about a 6-7% CAGR, which is in line with where we've seen the S&P grow, and far outpacing GDP. So despite the volatility in M&A activity, if you take an average over time, the trend continues to slope upward, which is how we got to this $4 trillion mark that we sit today. As we think about the current M&A environment, I would characterize it as very robust, which is a much different perspective I would have had I been sitting here 12 months ago as we're heading into Q4 of 2018. And part of that is despite the fact that the macro environment and the political environment is extremely volatile, whether it's tariff wars with China, whether it's Iran, whether it's healthcare reform or potential reform, which I'll get into in a bit. But despite all of that volatility that we're seeing in the macro environment and the capital markets, we're still at very robust levels from a capital markets perspective. So if you think about the equity markets being very widely open, particularly for healthcare, for the first time in years, we've seen healthcare IT assets be able to go public, whether it's Livongo, Change Healthcare, et cetera, and that window hasn't been open for a while. And then cost of capital is still, when you think about acquisition financing or debt financing, still extremely low by historical standards, even for not so well-rated credits. And I think, as we think about what the Fed may do at this point forward, it feels like rates are going to stay even at these historical levels for a while, if not go down a little bit further. And that is just conducive for a pretty robust M&A market. As CEOs think about embarking upon transformational acquisitions, the cost of capital to fund that, both on the equity side and on the debt side, remains very open and available. One metric that I like to look at as I think about the underlying health of the M&A market are deals sub $5 billion, which is probably most relevant for kind of the healthcare MSO space, right? So, this year has really been, which I'll get into in a second, the year of mega deals, right? The amount of 10, 20, 30, $80 billion in the example of AbbVie Allergan is pretty astonishing this year, and that's held up that pace to, bringing us to about $4 trillion of M&A activity. But if you look at the sub $5 billion market, and the blue line here are the sub $500 million deals, which if you can look throughout all the cycles of M&A, that market always kind of remains there and somewhat steady. And that to me is a good underlying barometer of how healthy the underlying M&A market is. And I would say the sub $5 billion mark is actually down this year. Depending on how you cut it, it's down anywhere from 15 to 30% year over year as you compare it to that activity last year. So it feels a bit frothy from my perspective when you have big strategic corporates doing M&A in healthcare and otherwise. That is almost a little bit unnatural and very large. and you have this sub $5 billion market, which I kind of view as the bread and butter of M&A activity, being it down a little bit year over year. And I think that's relevant as you think about where your world might be, right? Because I imagine a lot of the companies that you're involved with or the M&A activity you may be circling around are probably in that sub $5 billion range, which is a key part of the market that I try to monitor. Private equity, continues to be extremely active. This looks at level of financial sponsor activity going back, a significant period of time and versus today. And I'd say, the private equity front, in particular within healthcare, very active driver of M&A activity. We've seen private equity, when they find an asset that they like, being able and willing to compete with strategic type valuation multiples. And also, I think private equity, given the competitive landscape here and just the breadth of capital available, pursuing healthcare assets, more and more willingness to be creative. And whether that means it's partnering with the strategic, if you think about, Summit and Optum around Sound Physicians, or TPG, and Humana around Kindred. So willing to partner with strategics, willing to be creative in terms of form of capital, right? If you look at, some of the big private equity sponsors being willing to put things in like preferred securities to help facilitate an M&A deal. But it's certainly a very active asset class within M&A activity, especially if you think about it within healthcare. This looks at, what is the importance or contribution of healthcare over time to the broader M&A market. And if you look back to 1995, healthcare is a pretty small piece of the overall M&A market, and today it's about, call it 20% of overall M&A volume. So it's become an increasingly big part of or big driver of overall M&A volume. And look, I think it's also a byproduct of, over the last 10 plus years, healthcare becoming an increasingly important part of our global economy, right? As you think about expanding population, aging population, as you think about consumers, realizing more and more over recent years that they have a choice when it comes to provision of care and technology. When you think about the convergence from other sectors within healthcare, whether it's tech, whether it's retail, it's really driven a big increase in the contribution as we think about healthcare M&A volume contributing to overall deal volume. And that's a trend that we see continuing to be prevalent, if not increase. Within healthcare M&A, it's really been driven by large volume mega cap mergers, right? If you think about a CVS Aetna, for example, if you think about a Cigna Express Scripts, and I think, those are two transactions in particular that were clearly transformational, clearly, vertical type plays versus horizontal. And I think we'll look back in 5 years and say those were either very brilliant moves with a lot of foresight or potentially cautionary tales when it comes to doing big transformational types of M&A. If you look on the kind of red circle there, going back to my earlier point on kind of the underlying health of the M&A market, where I tend to look at the smaller deal sizes, that's down quarter over quarter. If you think about, if you just compare fourth quarter of last year and you look at that sub 1 billion level or sub 500 million level, not for lack of assets or not for lack of capital pursuing these type of assets, but it's certainly, the tale of healthcare and healthcare services in particular has been driven by a lot of these big mergers. And if you look at these bars at the bottom of the page, there's also a good mix of strategic activity, whether it's WellCare, Centene, Cigna Express, or private equity capital, right? KKR and Vision, for example, and others, where you're seeing private equity capital be deployed in a pretty significant way within the healthcare sector. I wrote these market observations up, but it's very hard to read on this laptop, so I'll try to go by memory. Just some macro observations on today's environment specific to healthcare. Clearly a lot of rhetoric around potential healthcare reform, right? Whether it's drug pricing, whether it's Medicare for all, whether it's the viability of ACA, and we've seen that cause a lot of volatility in the equity markets specific to healthcare companies that have exposure there. It's funny, we did Goldman held a executive outing for healthcare executives, and part of that outing we had our economists, our political strategists get up from Goldman Sachs and give a 45-minute speech on what are all different ways and policies and things that could get pushed through from the Republicans, Democrats, et cetera. But at the end of the day, his punchline was nothing's likely going to get through, right? So it's, there's a lot of rhetoric around drug pricing and an international basket. There's a lot of rhetoric around Medicare for all, and that's caused a lot of volatility in the public markets and a little bit of volatility in M&A. But what we've seen in our client base, both on the strategic front and the private equity front, is, look, at the end of the day, who knows? And as you're pursuing M&A activity or thinking about valuation, you have to factor in kind of worst case scenarios of, what if we do move to an international pricing index with respect to drug pricing? What does that do to big pharma? What does that do to kind of the whole supply chain, coming out of that? But ultimately, there's good assets and there's underlying tailwinds within healthcare that we think are here to stay. And so the M&A activity still continues to be pretty robust, despite the fact that there's a lot of uncertainty in the political environment. Capital markets are very open for business. If you think about the leveraged finance market, which is what fuels a lot of the private equity activity, is a very important element of financing within healthcare services. For the good stories and good credits, maybe even not so good credits, the leveraged finance markets remain widely open and oversubscribed and at very attractive levels of capital. Healthcare services in particular and healthcare IT has performed well. I mentioned earlier we've seen multiple healthcare IT companies be able to access the capital markets via an IPO, which we haven't seen for several years before. If you think about something like a Livongo, right, kind of very early stage, pre-profitability, but being able to go public, on a thesis of being able to bring, whether it's digital health or targeting certain chronic diseases. It's interesting that these type of assets before, really the only bid was selling to a strategic or selling to a financial sponsor, and now there's this window open on the capital market side where going public is viable for companies that are still in relatively early stages, right? Versus a Change Healthcare, for example, which is a very mature healthcare IT company. This looks at healthcare services performance by subsector. And you can see, Q4 was a pretty tough time, not just for healthcare services, but this breaks it down by whether it's healthcare IT, pharma outsourcing, managed care, and Q4 is a pretty tough sector for the broader market as a whole. If you recall, in fall of 2018, there was some expectation, I certainly had an expectation that we might be heading into a major correction as we saw volatility in the equity market spike and the equity markets come down pretty dramatically. And healthcare got hit across the board, right? And I'd say a big driver of that was the potential for healthcare reform became a very acute discussion that impact in particular, sectors like managed care and others. But it's been a very strong rebound in 2019. We've seen all of these sectors. And if you look at the very bottom of the page, there's a lot of greens there of each of these subsectors within healthcare being pretty resilient and bouncing back. And I think that's as a result of people saying, to my earlier point, look, something might change on the political front that could impact our subsector, but that's a scenario. It's not the only scenario, and we still need to do business. We still need to find growth, and investors are viewing kind of the underlying tailwinds within healthcare as here to stay and a relatively good place to put capital, which is why you've seen pretty good rebound in performance coming out of Q4. And from a multiple perspective, what this chart does is looks at where each of these subsectors within healthcare are currently trading relative to their 5-year average. And we could see here, you could argue home health might be a little bit overvalued relative to its 5-year average. But every other sector, for the most part, despite the fact that valuations are, fairly high, not as high as they were a couple years ago, each subsector is kind of in line with where their 5-year average is. And the other interesting dynamic, if you look at the bottom of that page, that compares expectation of forward-year growth previously to today. And what you could see is most of these subsectors within healthcare, the expectation of forward-year growth has actually come down. I think pharma outsourcing might be the one exception to that statement. But it's interesting that valuations have held for the most part in the public markets, and it's also reflective of what we're seeing in the private markets in terms of M&A activity and how people are thinking about valuation. But expectations of future growth have come down, but despite that, valuations have held. some of the, headline continues to play a very prominent role in just the overall healthcare narrative. And what this looks at is whether it's the rebate rule, whether it's Medicare for all, whether it's surprise billing, ACA challenge, you can see there's a lot of different, potential inflection points or levers that can have, ripple effect impact upon healthcare services. And you can see on the very right side of the page, we looked at, what is kind of stock price reaction or market cap reaction within the subsegment of healthcare that would be most impacted likely by, that piece of legislation. And you can see there's been a lot of volatility, right, particularly within the payers, within managed care, as some of these, potential headlines have become more prominent or more into play. Equity investors, have contributed to a lot of volatility in these stocks. But despite that, very, active and robust M&A activity across, all these segments within healthcare. What are some major themes across healthcare services that we think are going to continue to drive performance and continue to drive M&A activity? Payer-provider collaboration. I think I'd sum it up by whether you look at Optum acquiring DaVita Medical Group or SCA, it's this desire to get closer to ultimately the patient and consumer. Right? CVS, Aetna, same sort of theme. Right? Cigna, Express Scripts, same sort of theme. Realizing that increasingly so, the consumer more and more, we call it consumerism, has a choice around healthcare, is more and more educated around their healthcare options. I think the long ball is the power of being kind of wrapped around the consumer from end to end and the data that can come from that. And realizing that, in order to capture the patient, provide the best care, take costs out of the system, be predictive around efficacy of therapeutic treatments, medical adherence, really moving closer to the patient, either in terms of, provider services or acquiring technologies that can bring, somebody like a payer or managed care provider, closer to the consumer. We've seen, increasing, basically everybody right now has moved to having their own PBM for the most part, and we see increasing willingness to partner, whether it's, Humana and Fitbit, United Healthcare and Apple Watch, but, it's both, we'll see in a couple slides, investing in technology, but also partnering in technology. And this is all in the spirit of everybody realizing that, getting closer and closer to the consumer, either through M&A, through strategic investments or partnerships, is a key trend that we're seeing among the big kind of corporate healthcare players. And this just shows across, a lot of the big, whether it's Anthem, CVS, Humana, and a lot of this is not widely publicly known, but a lot of strategic investments that these corporates are making into technologies, into capabilities, data analytics, either through outright acquisitions, whether it's Optum and Equian recently, or small strategic investments to try to stay plugged in and understand how technology is going to impact their ability to provide care and manage ultimately the patient. The trends around technology, whether you see, some of the disruptors taking advantage of this consumerism, like a GoodRx, right, where you have a patient that can go onto an app and find, within their 5-mile radius, what is the best drug price I can get. If it's not Walgreens down the corner, I'll walk down the street to CVS and use my GoodRx coupon, and that's been extremely disruptive for prescriptions around healthcare. Whether you see Roche and Flatiron and this belief that if you can get patient data and clinical data, can you use that to do things like accelerate your clinical process to commercialization around drugs? Whether you can better be attuned to identifying the efficacy of drugs and potentially identify patients for things like clinical trials or otherwise. This is kind of the ecosystem within healthcare technology. I'd say the punchline is there are a lot of companies out there chasing this. If you look at the logos here across revenue cycle management, data analytics, consumer focus, there are a lot of companies trying to solve this problem, which is how do you really introduce technology into the healthcare ecosystem to take costs out of the system, monitor the patient, collect data, aggregate data, perform analytics on top of it. And this is where we see a lot of corporate capital from an M&A perspective, very much focused. and certainly private equity capital. A lot of these are private equity owned, and private equity is spending a lot of time in this particular space. The last couple things I'll say is you can see on the private equity theme, big part of healthcare services, whether it's practice management roll-ups on the smaller side, deploying capital within technology, care management. So to the extent that you are involved in an MSO, I think having a dialogue with private equity should be a very important part of your day-to-day operations, and just understanding who the players are out there and what capital sources are out there, because it's varied and it's across the board. You can see on the next slide, just the breadth of, these are some of the largest private equity firms and the amount of capital they have sitting in terms of dry powder, and a lot of the assets that they already own across all the subsectors within healthcare. So finally, this is our crystal ball. I'll kind of caveat, this is actually my crystal ball, so I don't want to say this is definitely a Goldman Sachs view, but what I would say is, despite all the volatility that we're seeing in the political environment in terms of healthcare, M&A activity still continues to be very robust and active, right? The level of activity we see in our pipeline, the level of dialogue we have within corporates thinking about deploying capital in terms of M&A or strategic investments, private equity being out there very hungry for good assets with a tremendous amount of capital to deploy. It feels like a pretty good environment from an M&A perspective. Strategics, I think, are continuing to seek ways to be part of the tailwinds that we're seeing within healthcare, right? This consumerism, desire to continue move things more to an electronic digital manner, wanting to get more kind of wrapped around the consumer and end-to-end, whether it's from the manufacture of a pharmaceutical product to the distribution of that, to administering it to the patient in the right manner, to tracking that, to ensuring adherence, to wrapping other services around whatever indication a patient might be dealing with in terms of home health or other services, and ultimately doing it as efficient of a manner as possible and cost-effective manner as possible. And there's still ways to go. And then coming out of that, which I think we're in very nascent days, is how do you take all that consumer interaction and take the data from that and aggregate it and draw really insightful analytics that can do things like identify the right patients for clinical trials, identify which drug or treatment has the greatest efficacy on the patient, and really provide better health, and as a result, lower the overall cost of the system. Consumerism, I cited GoodRx, and there's a ton of examples, Apple Watch, Fitbit, all the things Verily is trying to do, but consumerism is here to stay, and it's been disruptive, and it'll continue to be so. Livongo, another example, but realizing that consumers are getting more educated on their choices around healthcare, the provision of care, doing their own research, and becoming more demanding when it comes to healthcare, and providers are just going to have to adapt to that, and the biggest way to adapt to that is going to be through technology, which, going back to my ecosystem, there are a ton of companies chasing that exact thesis. I'd say the last couple of things, I mentioned private equity, but healthcare IT is very much a sector that I'm very bullish on. I think that's, whether it's everything from revenue cycle management to some of the other things I spoke about around consumer, is going to be an important part of the sector. And this continued convergence, I think, is, we're going to be able to watch Cigna Express and CVS Aetna and see how that plays out, and whether that's going to be the model of the future. You have people that are deciding to go that route, and you have people that are deciding to just focus on their core, right? Whether it's a Centene merging with WellCare and saying, we're just going to bet on government-sponsored programs, and we know how to do that well, and we're going to be the leader in that. So there's two kind of big macro strategies playing out on how much do you vertically integrate down to the MSOs, or do you just kind of stick to what you know really well, and you're kind of every other service or capability you need is more of a service provider partnership relationship versus needing to vertically integrate via M&A. So it'll be an interesting few years to watch out to see how this all evolves. I think I'm over on time, but if there's any questions, I would love to answer anything that's on your mind. Great. Okay. Thank you very much. Enjoy the rest of the conference. Appreciate it.